we're actually quite optimistic about the China overall market outlook for this year. Looking at where the interest rates are heading, a very accommodating fiscal policy going forward. That should certainly mean certain industry, particularly on technology and more on AI, being quite in favor. So we are optimistic about the direction of travel and also some of the opportunities that the policy can bring to investors.
Welcome, and it's a great pleasure to have you here with us today.
No, the pleasure is mine. Thank you for having me.
To start with, I'm curious, how do you see China's economic growth and the market outlook in 2026?
Well, thank you. I mean, we're actually quite optimistic about the China overall market outlook for this year. Obviously, it's riding on strong balance sheet, very accommodating fiscal and monetary policy, and also the fading impact on tariffs. If you looked at the broader market, inflation is under containment, and then you look at productivity through the adoption of AI, it's going to be continued to improve. So overall at UBS, we actually had a 8% growth forecast for A-shares, a 10% EPS growth for MSCI China, and that translates to about 14% potential upside for the index this year.
So is China really back as an investment story, or are investors still being kind of cautious?
Well, I think after a period of skepticism, I think global investors are now being a lot more constructive about China as a market. If we were to follow some of the fast money investors like Latin America pension funds, for instance, they've already been adding back the allocation to China. So I do believe that will be a very natural destination for investors to deploy their capital.
So from your point of view, what are the trends and feedbacks from clients regarding to their views on China and Asia?
Yeah, so actually this week we have our Greater China Conference here in Shanghai with over 3,600 attendees. What was actually very interesting is this year we've seen a meaningful uptick in terms of international community that's joining us. Actually over 30% of increase of attendees from the US and also from EMEA coming in this year versus last year. And that really speaks to the renewed interest. We've also seen that translating into really more constructive discussions, whether it is about China A-shares, whether it is about single market fixed income strategies, particularly RMB fixed income, or more broadly on private market as well.
So you are positive about the business environment?
Absolutely.
And also, how do you see government policies, especially we know the 50th five-year plan, right? So how this will shape investment opportunities in China?
So we have been following the policies, including obviously the 15th five-year plan. And to be honest, we do observe a very clear shift away from quantity-driven expansion to now more focus on sustainable innovation kind of led growth, together with the fact that looking at where the interest rates are heading, a very accommodating fiscal policy going forward, that should certainly mean certain industry, particularly on technology and more on AI, being quite in favor. So we are optimistic about the direction of travel and also some of the opportunities that the policy can bring to investors.
So do you think investors in China and Asia are kind of shifting their preference for certain products or strategies?
Yeah, I mean, for Asian investors, if I take institutional investors as an example, to them, obviously, liquidity, capital preservation, and obviously return maximization tends to be at the highest of their objectives. But actually, in the ever-changing investment landscape that we're all trying to navigate, there is a big focus on diversification. Let's take fixed income as an example. So fixed income for investors has always been and will continue to be a very important asset class on overall portfolio. We've seen an uptick on fixed income investment with investors in Asia, but we've also seen, as I mentioned, more discussions that are about single market strategy. For instance, China fixed income and also Australia fixed income. We've also seen, for instance, some of the offshore-based Chinese life insurance companies diversifying into emerging markets debt, and also looking at bank loan as an asset class. So overall, there's been more constructive conversations on the traditional space. Maybe I could also add a little bit in terms of alternatives. I think for Asia, especially for institutional clients, historically the allocation to alternatives has been very low versus global peers. And that actually presents a pretty interesting opportunity for investors to want to look for diversification for one, but also different alpha sources to enhance their return. So we do feel that there's actually a trend towards diversification, but more about looking at new investment opportunities for clients here in Asia.
So how do clients view the value and role of China within their broader investment portfolios? And do you see China as a stabilizing factor in global markets?
Yeah, I think China definitely has a much stronger role to play in investors' portfolio globally and also regionally. If I were to look at just capital markets, liquidity, and market positioning, if you combine China and Hong Kong, it represents around 80% of regional market turnover. And for Asia, the liquidity is already at 88 trillion US dollars, which is about 40+% of increase versus a year ago. And that really speaks to the fact that China is already playing a very important role in both regional market dynamics and also global market dynamics. There is obviously increasing focus about kind of where investment portfolios are positioned, with really more and more concentration towards the US because of how dominant the US market has been over the last 10, 15 years. So there is also a calling for investors to diversify, and naturally they want to look at markets like China, Asia, emerging markets being an interesting opportunity for them to consider.
Yes, so speaking of the diversification, so how should investors balance the exposure between like the China market and other markets?
Yeah, I think in investors' mind, obviously they are very mindful about geopolitical risks. So I'll give you an example. Just a few months ago, we have conducted annual research manager survey where we interviewed leading central banks and also research managers on how they see the world and how they position their portfolio accordingly. So actually to them, they're quoted, actually 70% plus of them actually quoted trade war being the biggest risk. So they are actually already responding to that by diversifying into different asset classes. Gold and actually a green bond were really the highlights in terms of increased allocation. Alternatives is also one, particularly in areas like infrastructure and real estate getting increasing attention. And then maybe going back to the China topic, they're also looking to diversify away from US holding. So actually more than half of them has trimmed the US holding exposure. Where are they moving the money to? It's actually Euro and RMB. So you can also imagine that investors are taking a very proactive stance to try to build a more resilient portfolio. And naturally, markets like China should be a beneficiary.
So we also see China's fund industry is expanding rapidly. So as a global player, what opportunities and roles do you see for international asset managers such as UBS in this evolving landscape?
No, thank you for that question. I mean, we have always been really excited to look at the growth trajectory of the China mutual fund market. I think towards the end of last year, it's roughly at around 35 trillion RMB and growing. That's really exciting. We're also seeing really meaningful momentum being built about consolidation between mainland and Hong Kong. So that has been leading to a renewed interest towards mutual recognition of funds. So as a truly global asset manager, we are pretty well positioned given our experience in both China onshore market and also in Hong Kong. We do feel ourselves as an important bridge between opportunities that we see globally that we can bring to China, and also opportunity that is really presented within China to bring to global investors. Our commitment is very straightforward. We want to stay very close to our clients. We want to understand what our clients' priorities are, and then really working hand in hand to provide our unique insights, whether it is market dynamics, whether it is regulatory complexity, and obviously also offering our unique investment and service proposition to develop bespoke and customized solutions that can really help our clients deliver the right investment outcome. So that's something that we are committed to do.
So what's your prospect for as we entering the 2026?
Yeah, I mean, it's staying close to our clients, right? Because I think while the investment environment is becoming increasingly unpredictable and challenging in a way, but we do feel that there are certainly, good investment themes that we feel strongly about. The whole point about diversification is very key, and then the emerging kind of opportunity that comes with China is something that we really want to resonate with clients. So we're very much looking forward for a busy year, but one where it's going to be very fruitful because it's going to be a very intimate discussions with our clients and business partners to offer the right solutions for them.
That's all the questions we have today, and thank you for your insights.
No, thank you for this. Thanks.